Hello and welcome. You're watching the newsroom right here on ET Now. I'm Ajay Sharma. The markets are trading flat. They have recovered from their lows, but the way the scare was so elevated in the morning, the markets did not really succumb to it. The yield scare, yes, they are down. Profit taking is setting in, but it's limited to profit taking. No big wholesale selling. Even yesterday, the buy-sell figure was small, and it did not show any big wholesale selling. It appears that the money is pouring in quality stocks wherever valuations are good. That's why it is getting absorbed. We've got a special guest joining us on the show today to talk on a host of issues. How the way market intermediation is getting backing from the technology and digitization is happening there. Millennials joining the DIY investor brigade, and overall market view from the lens of somebody who has really seen the market evolve and transform over the last 3 decades, if I'm not wrong. I'm talking about Mr. Dinesh Thakkar, MD of Angel Broking. Dinesh, good afternoon. Thank you so much for your time. Now, you've really seen the complexion of the market change quite a lot in the 3 decades. The way representation on the markets has changed. New economy stocks, platform companies, IRCTCs, AFILs of the world, even your own company, the way broking business has transformed, and Angel is taking a leap in that, completely transforming into a digital-backed, almost a fintech company, if I may say. Talk to us about how are you really taking this forward? Because if I go by the numbers, be it your results or client addition, they are growing at a scorching pace. Are you getting the tailwind from using technology in an efficient manner?
Yeah, Ajay, what you're saying is right. See, India is a land of millennials, and most of the populations live in tier 2, tier 3 cities. So previously, it was very difficult to reach to this audience in a very cost-effective way. And digital has helped us to really penetrate into tier 2, tier 3 much deeper. Today, we acquire customer almost from 98% of PIN code of India. And plus one thing, we used to talk a lot about our demographic dividend and advantage that we have because of our youth. And now it is playing out. One, because of availability of cheap data package and fast data package to this youth. And plus orientation towards mobile for their shopping, for any of their need. So today's youth don't go to bank or don't go to theaters for entertainment. They consume all this content on their mobile. That helped us to really penetrate deeper into market. Now, when we talk about this economy in this last 7 to 8 quarters, we have seen inflation have been coming down and interest rate also have been coming down parallelly. That has given us opportunity to offer this equity class and explain this youth who are much more ready to accept and acquire knowledge on this asset class. So few things like digitization, digital India movement, Geo offering data package at a very reasonable price, and youth getting educated on this equity, how to approach equity on social media. That all helped us a lot to penetrate deeper into market. Few quarters back, 4 or 5 quarters back, we used to acquire almost 50,000 customer a quarter. Today, as we speak, last quarter, we acquired around 5 lakh customer. And as we are speaking for 2 months, we have crossed more than 5.5 lakh customer. So this is a flow that we are seeing in this market. These are the people who are coming to the market who are well informed about equity, and they are taking the baby steps to understand the market. So phenomenal change I have seen.
Right. Dinesh, you must be having data, geographical data. If you could share some example, we understand that the way folios in mutual funds are expanding at a higher clip in other, the cities beyond the top metros. Millennials are joining in. DIY investors are increasing, as you were saying yourself. Can you share with us big cities or regions where you're seeing higher increase in new client additions, or some data around that?
See, if I compare to previous few years when it was more of an e-commerce era, we used to get most of the customer from metro and little from tier 2. But now if I look at data, From metro, hardly we get 8 to 9% of our total client base. And almost like 90% come from tier 2 and tier 3. And if I slice it down to tier 3, almost 55% the customer that we acquire comes from tier 3 and beyond cities. So that is a big number, which was almost negligible if I take 4-5 years back. Now, when I talk about acquisition, our 90% of the acquisition is done through digital channels. We don't have any kind of like service office or acquisition office. So all our acquisitions are done by digital processes. So whatever client we acquire, 90% is acquired through kind of digital acquisition, of which even of that 80% comes for this kind of like new flat fees broking and all that. So we have seen phenomenal growth in people coming from tier 2, tier 3 and opting for this flat fee plan that we offer. If I look at our new offering compared to old offering, for last rolling 4 quarters, our net brokerage from this new flat fees plan have increased almost by 3.5x compared to old plan, which has just grown by 5 to 10%. So if you look at millennials, they are smart enough. They understand if you are coming through mobile, we want a better kind of like plan. And at the same time, they want lots of good content. So what I am seeing, people from tier 2, tier 3, it is not that they are acting as a novice or they are first time to the market. Kind of questions they ask on digital platform is really like something which really makes me wonder that this is the generation who understands the stocks are not risky, they are volatile. And there are ways to mitigate that volatility. So it interests me a lot to talk to this generation, understand what they are asking, and they're asking very relevant kind of questions. So across India, I think we are acquiring customers from 98% of PIN code, but most of these people are coming from tier 2, tier 3 and beyond.
Right, Dinesh. No, we completely understand. That's a very interesting incremental point and insight which you have shared. I mean, we ourselves at ET Now are trying hard to connect with the millennial audience and keep sharpening our content to suit their taste. And we have got very good response. Let's shift focus a bit, Dinesh, and talk about markets. Last time when we spoke around Diwali and now, the markets have really taken a very big leap, led by large caps so far. In your view, what phase of the market are we in? What phase of the market cycle are we in? You see some reasonable scope or runway even from here on, or are we getting in a bit of a huddle right now and may consolidate? What are your thoughts overall?
See, if I look at market and based on my experience, I can say that whenever there is kind of like stimulus package going on, market will give correction, but will never like fall very sharply. So currently people are concerned about bond yield and all that. There can be some kind of like correction, but I would say this is an opportunity to buy. Because if you look at overall growth in economy for this last quarter, I think India has seen almost like this growth coming back. And we are expecting there would be some kind of like better growth for next few quarters. And if I compare this with last 3 or 4 quarters, we were into negative. Today, almost we are flattened out. And if I look at budget, it was quite bold budget. And I think overall market would be driven by liquidity because globally we have seen investors are in that risk on kind of phase where cyclical stocks and cyclical sectors are going to benefit. So overall we feel that if I look at banking, if I look at IT and all that sectors, I don't see much of a room to correct. I see only from here market going up. Although valuation is bit rich, but I have seen in this kind of phases, market will not correct till the time we see headline numbers on economy really going positive and coming to their normal.
Dinesh, you also seen in the last 12 months a lot of high quality mid-cap companies from newer sectors getting represented on the exchanges, seeing very good response. A lot of businesses which are transforming their business models, getting very renewed investor interest. Even your own IPO was a very successful one and follow through buying. because you have changed the business model, transformed into a tech-backed kind of a fintech of sorts. It has few representation now. So are you seeing that this age for high quality mid-caps, which are upgrading their business models and numbers are backing them, they have a better probability of making more wealth for investors over the next 12 to 24 months if the bull run remains intact and growth gallops? What are your thoughts on broader markets?
I see lots of value in mid-cap, especially if I look at a push that the government has given for rural economy. I think companies who are focused on rural economy are going to benefit and are going to show good results and good appreciation. If I look at digitization story, it is like a new kind of like a story for market, and there are limited companies available. I think that sector also is going to benefit in a big way. If I look at import substitution stories, they also are going to benefit. If investors are focused on these three stories, I think if they cherry pick a good company with a good track record and management, I think they are going to get a really good returns.
But you see, this market to continue in an upward expansionary phase, as the numbers seem to be suggesting. The Q2, Q3 numbers are very good for 2-3 years. Do you see runway for growth before the cycle fizzles out?
See, I feel that this third quarter results were really fantastic, and this kind of trend will continue. And as I said, that I feel lots of good stories like in banking. Also, we saw NPS lesser than what people feared, and government's push on infrastructure will push infra plus cement story. And I'm bullish on pharmaceutical and all that. So I think overall, if you look at quarterly 3 numbers and we look forward for next 4 or 8 quarters, it appears that we will be progressively seeing better numbers. So that will give a kind of a support to this market, which appears to be overvalued. But I think growth in EPS will be far more faster than the growth in market, which is going to support a market at least for 4 to 8 quarters.
Right. Dinesh, leave us with a view for your shareholder viewers which are watching. What are the strategic areas you are working on for the company? What direction are you wanting to take? A strategy 3 to 5 year kind of a plan now that you're a listed company as well. And we've seen the numbers, kind of back your moves on the tech side or trying to, make it a fintech company. What lies ahead broadly, if you could share some color?
As I said, that strategically, this technology and product has become very important for us. We are coming out with lots of innovation on that front. So our aspiration is to become a preferred fintech company for all kind of financial services. So today, we are growing at a good rate in stockbroking. By next quarter, we will be planning to start focusing on selling mutual fund, insurance, and all that. So overall, focus for next 4 to 8 quarter would be how to get in our customer to buy more products on the same platform. If you look at mutual fund industry, which appears to be not growing at the speed what stockbroking have grown, but I see a huge potential in mutual fund, and I see huge potential when it comes to distributing this mutual fund to tier 2 and tier 3, where I think digital players have not yet been fully successful. So our focus is how to get more market share in that industry too. So going forward, we are working a lot on creating an app and journey in that, which is very user friendly, very easy to use, and plan for millennials. It would be very easy to plan their finances, starting from their first job till the time they reach their financial goal or retirement. We are planning lots of journeys for them. So I see a big opportunity on that side. So all our focus is on to make our app very user friendly, so that millennial, when he starts his journey from buying a stock or buying a mutual fund, or he has a requirement of wanting a loan for his home or a car, everything should be there on this app.
Right. All right, Dinesh, we'll let you go on that one. Thanks so much for joining us today and sharing your thoughts on the company as well as on the market. That was Dinesh Thakkar, someone who's really started a broking company many years back, decades back, and then grown it into a fintech company now, and how they're connecting with millennial, the DIY investing community, which we are seeing a surge for. Time for a short break. More news and analysis on the other side.